Now more than ever, people feel like the average American just can't seem to get ahead. With inflation and housing costs continually going up, there's more financial stress on the average American today than say there was 100 years ago. A lot of people cite that this is the first generation to not be better off than their parents, and this leaves everybody wondering who is to blame. And the most thrown out solution that you hear everywhere is the 3-word phrase, tax the rich. Classic Robin Hood economics, take from the rich and give to the poor. It sounds so good in theory, yet for some reason throughout all of history, it seems to never be able to be executed correctly. And whether you think it's greed, criminal activity, corruption, or whatever that causes this to never work, the reality is, it just doesn't. It's in human nature to just not work as hard when everybody's treated to the same outcome. This goes back to our primal instinct. If everybody was just hand-fed the same amount of steaks from the amount of, bulls that got killed or whatever, people wouldn't feel the need to go out and hunt as much, thus leading to less food for everybody else and eventually everybody going hungry. Or the only ones profiting would be the criminals who just go out and steal. And so as we hear a phrase, tax the rich, something that sounds so good, or nobody should have $1 billion, I want to dive into why this just isn't really a feasible outcome. And people think that the system's broken, and it partially is, but the reality is that they don't realize that this is a system that they actually support. And so what's up, guys? If you don't know, my name is Aaron Shablosky. I bought and scaled my first business when I was 19 years old playing Division I football at over $400,000 in just 6 months. I sold it, and now I'm in the process of launching a tax strategy and investment firm for sales reps. And I put out content pretty much daily explaining to you guys different financial topics and business topics that are going on around the world so you can grow your understanding. I promise that in this video, you will gain a clear understanding of why it's not as simple of just taxing the rich, and not just the basic stuff that you hear every day about loans and that you can't tax those stuff. We're going to take a way deeper dive into other stuff on why, 1, billionaires can't get taxed, 2, why it's not good to tax them, and why also income tax probably shouldn't exist in general, and how they do pay their fair share after all. So let's dive in. First off, what is the income tax and why did it start? See, what most people don't know is the income tax started in the 1860s to fund a war, and then it got taken away, and then it got brought back to fund the First World War. And what it was meant to be was something that funded the war and then went away. Interestingly enough, back in 1867, the first income tax rate was 3% on high net worth individuals. And that was it. It was seen to be temporary in the early 1920s, but it just seemed to stick around. And so first, before we dive into how rich people seem to avoid tax and why we shouldn't overly tax them, I first want to address the fact that rich people do pay more than their fair share in America. The top 1% accounts for 22% of the total income, and they pay 40% of the taxes. So the quote 1%ers are more than 40x paying their fair share. What you understand is that the vast spreads in income are so different that even when the rich people seem to not pay as much as you think that they should, they still pay more than almost everybody else. And look, I don't want to overly go into the moral debate of if people should ever have that much money, but I do want to make something very clear. Yes, some billionaires are outright evil. But for the vast majority of very wealthy people in this country, the wealth wasn't just handed to them. It was likely given to them by you. See, people complain about Jeff Bezos and Mark Zuckerberg and Steve Jobs and guys like that being like absurdly rich, but you use their services every day. And at the end of the day, yes, it is absolutely insane the amount of money that they have. But when you view it as that is the reward for the amount of impact on people they have had. And the system doesn't always align perfectly to the people that have the most impact make the most money, but generally it does. And there are holes in the system, but most people that become very, very wealthy do it through helping large amounts of people. And if we didn't have that incentive in place, the incentive of extreme wealth, then there wouldn't be a reason for those people to innovate, whether you like it or not. And you might think, oh, well, they have $1 billion. We can just, take 500 million and their life will still be the same. I want to break down that it doesn't really work that way. And also, I want to do a brief mindset check. What you're saying when you're saying tax the rich and people who make more money need to get taxed more is you're saying the more people win, the more they need to lose. And the better somebody else does in life, the more they need to pay into us. Once again, I don't want to go too deep in the moral argument of this, but you can even extend this. Does somebody become evil when they have $1 million? Do they become evil when they have $5 million? What about 10 million? There's just such a slippery slope that it's really hard to tell if somebody actually shouldn't have a money at a certain point. And the other thing I want to mention on this is that taxing the rich, as that is said, won't exactly make Americans' lives better. The government already grossly overspends. Deficits are over $1 trillion right now, okay? It's not that the American economy is necessarily lacking tax revenue. If we were to pump $1 trillion more of tax revenue into the IRS and into the federal government, there's no sign that that money would actually lead to a better America, because we've pumped money into so many communities and it hasn't changed a thing. A great example of this is we've pumped over 9 figures, 3 commas of money, okay, into different low income communities in America. And almost all of them are worse off than before that money was put in. So generating tax revenue, unless you literally want to take, $50 from a billionaire and put it in your own pocket, it just doesn't really do anything. And most likely, that money would just end up back in their pocket anyways. When you go to pay your rent, or you go to pay your mortgage, or when you go to buy something off of Amazon, guess who owns all of those companies? So whether you like it or not, if we were to put more money back into the hands of the people, it would just go back into the hands of them. But regardless, it doesn't matter. Now, even if up to this point, you're still convinced, I don't care, we need to tax the rich people. Fine. Let me break down how this system actually works so you can see that it's just not as logistically possible as you might think. So 1, rich people don't get paid like normal people do, right? They don't take salaries from their job when they report income, okay? What they have is usually a business or a real estate portfolio that is worth tons and tons of money, say $100 million, okay? And what they can do is they can go to the bank and say, hey, I want $10 million, and if for some reason I can't pay the $10 million back, you just take some of my real estate, or you take some of my business. And what happens here is usually the future profits or the gain in value from those businesses or real estate will end up paying back the loan that they took out. Or what usually happens instead is, say Apple is worth $100 million, which is obviously worth way more than, right? The guy goes to the bank, he asks for $10 million, and then a couple years later, now Apple's worth $200 million. Well, now he can go to the bank and take out a loan for $30 million, pay back the loan of $10 million, and he has $20 million to mess around with and do the same thing. First off, loans are never taxable. And whether you think that they should be taxable or not, it doesn't matter, because it is impossible to enforce that. See, the problem is people say, oh, well, billionaires taking out loans is basically the same thing as them getting income, so maybe we should just tax the loan. Here's the problem. The loan is still risky. Okay, if they don't keep growing their businesses or their real estate portfolio, they will have to sell their real estate portfolio and pay taxes on that sale if they want to pay back the loan. The only way that they can avoid taxes is if their businesses and real estate portfolio keeps growing. And now, you might think that this is a huge problem, this is a scam, this is a loophole, but when you step back and look at society, this is actually a very good thing. And here's why. When we encourage billionaires and rich people, I just say billionaires as a reference, to keep their money in their businesses and in their portfolios, that is keeping the American economy growing. See, if we make, Elon Musk sell all of his Tesla stock to bring home any income, okay, or for him to use Tesla profits to pay for his, electric bill, what we're essentially doing is taking money out of the stream that is Tesla. And whether you like Tesla or not, we want society to be the first people that creates robots, right? We want that to be done in America. So by taking money out of his pockets, we're getting in the way of him creating a product that, 1, makes America better, and 2, makes us more competitive against the rest of the world. And this is a general rule of how the tax code works. And this is just what the normal person doesn't understand. Because if you're pissed off that billionaires do this, you can do it too. Pretty much every real estate investor with, over $5 to $6 million in investments is doing the exact same thing. And the reality is everybody can avoid taxes if they just save and invest their money the right way. See, the government wants people to invest their money and want society to turn out a certain way. They want people to build buildings, and they want people to grow businesses, and they want people to get more oil and more, when Biden was the president, more electric stuff. So the government gives you tax breaks for putting money into those things, right? And this is why real estate is such a big thing. Everybody needs somewhere to live, and the housing costs are rising. So we need to increase supply. So we got to motivate people to put their money in there. So the government basically says, hey, if you put your money into real estate, you can write off the investment that you made. And when they introduce debt, they're able to write off a lot more. Let me give you an example. So let's say a real estate investor wants to buy $1 million building. And for this example, he is a real estate professional. So that income that he makes will go against all active forms of income. Basically saying if his rental makes profit, then he will be able to use all of that profit or losses to go against his W-2 income if he were to some reason have a job. Now, back to the point. There's $1 million building. This investor puts down $200,000 and takes out an $800,000 loan. That investor will be able to get up to $1 million worth of tax deductions for that bill, even though they only put in $200,000 of their own money. And you might think this is BS. How can they put in $200,000 and get $1 million write-off? Well, they are taking a risk by using that $800,000. And so by using that risk, the government rewards them. And if you think they don't deserve that tax deduction, then you wouldn't have anywhere to live. So let's say after all this, you still think, okay, well, we need to still tax the rich. If anybody has that much net worth, we need to go tax them. Here's the problem. Billionaires understand, rich people understand that lowering your tax bill and making sure your assets are protected doesn't necessarily have to do with owning everything yourself. So what these people do is they transfer the ownership in all of their businesses and their real estate portfolios over to family members and trusted people. And they form different entities that make them private. And so if you were to assess a tax on these people, well, you wouldn't really be taxing anything except what their kids have, but their kids make way less money than them, so it really doesn't make a difference. For example, Dave Ramsey has came out and publicly said he only owns 1% of Ramsey Solutions. His kids own the rest, but his 1% is the one that actually controls it. And so it is logistically impossible to tax these people because you don't actually know where all of their assets are. It's been transferred all the way over to their kids, their parents, their aunts, and their uncles. So everybody has the wealth, and that's how generational wealth is created. And you might have a big problem with this. And if you do, that's fine. But instead of having a problem with it, why don't you try to learn from it? Because this is possible for everybody. So if you're still saying tax the rich after hearing all this, you are saying something that completely disagrees with an American principle. And for me, looking out, if you are somebody that comes from an underprivileged area or anything like that, first off, there has people that have came from underprivileged areas and became extremely successful in America. And I believe that if you become one of them, you don't deserve to get taxed because you made it out. We should encourage people to make it out, not discourage them. And it is possible for everybody to become successful in America. If you guys appreciate the video, make sure to subscribe. Put down any comments in below if you have questions about this, or if you think I'm an idiot and we just need to tax the rich more. I promise you I'm not one of those guys that just says billionaires are the best and we should just give more of our money, but I do have respect for people who go out and win. Make sure to subscribe, hit that like button below, and I'll see you in the next video.